Hey guys, it is me. It is TK Barlow from the Barlow Group Tax and Accounting Firm. So listen, I wanted to come and really discuss with you quickly about how to take tax deductions safely, all right? Because from my experience, what I have gathered is this, that there are basically two types of tax filers, okay? You have one that they are really reluctant and they hesitate to take tax deductions out of the fear of that, the IRS is going to come and get them and drag them away, and they don't want to raise any type of red flags. And then you have the other type of taxpayers that want to write off everything under the sun, and if they could write off the air that they breathe, they would write that off as well. But the problem is this: when you are hesitant to take tax deductions like your expenses and you don't write anything off, then you are definitely leaving money on the table and you are overpaying in taxes. But if you are the person that likes to write off everything under the sun, that is a problem as well, because you are more than likely to raise a red flag with the IRS if you are writing off things that are not for your business, that are outside of the IRS criteria. Okay, so I want to give you kind of a roadmap or kind of a guide to help you be able to determine how you are able to really write off your tax deductions and stay compliant and in line with the criteria that the IRS provide. Okay, so the first thing is this: your expense, it has to be ordinary and necessary. So what does that really mean? It means that your expense have to be necessary for your business. It has to be something that you use in your business ordinary, and it has to be something that is needed for your particular industry. Because sometimes we try to slide those things in that do not necessarily go with your business, and that could potentially raise a red flag. And so you don't want to do that. Like if you have a hair salon and you are trying to write off expenses that you have used in another area in your life, maybe for another business, then that is not okay. That is not the route to go, okay? So you want to make sure that your expenses are necessary and ordinary for your business, okay? So secondly, your deductions, they must be they must be directly related to your business activity. So it has to be for your business purpose, okay? So how do you take your deductions and not raise a red flag? What you want to do is you want to be able to maintain your records, okay? Because here is something to think about. The IRS, you really don't have to have a red flag to be audited. You could be chosen as randomly for an audit. And so what you want to do is you want to make sure that you are keeping all of your records for all of your expenses that you are writing off. You want to make sure that you are keeping your documentation. And so it kind of goes back to having that bookkeeping system in place. As long as you have bookkeeping and you have, history of those transactions, you have your receipts, you have your statements, then you are good to go. And that is one of the benefits of really having a bookkeeping for your business, is that that bookkeeping is going to act kind of like a internal audit for you, right? So in the case you were ever audited by the IRS, you have everything because your bookkeeping is that backup plan, all right? So keep your documentation, maintain your records, all right? And again, you want to make sure that your deductions are a reasonable amount. And so we'll go back to the hair salon example. Like if you have, you wanted to buy a $200,000 hair dryer for whatever reason, and you want to try to write that off, then that's going to be a problem, because they're going to look at that and say, hey, why are you purchasing a $200,000 hair dryer? Now, if you wanted to purchase a hair dryer for your salon and it's blinged out and you have it's gold plated or whatever, then that's fine if you want to purchase that. But when it comes comes to trying to write that off as a business expense, then you may have a little issue with that because it's not reasonable in the IRS, in the eyes of the IRS, right? So it has to be reasonable, it has to be ordinary, it has to be necessary, and it has to pertain to your business directly, okay? So another thing that you want to remember is that you have to write your expenses off in the correct tax year. So if you have expenses that you have taken like, a couple of years ago and you're saying, oh, well, I need to write these things off, then you're not going to be able to do that. In the case of an audit, and they see that those write-offs did not come in the correct year, then you could potentially, have a little trouble in that area. So just to stay clear, just to stay safe when it comes to taking your deductions, because you need to take your deductions. You need to be able to write off those expenses, because what happens is this: your business expenses will help break down any type of tax liability. It's going to break down any type of taxes that you may owe. And so your business expenses are really going to help you save in your taxes. So you don't want to not write anything off out of fear or out of, not understanding. And so here is the criteria again, guys. Just make sure that those expenses are ordinary, necessary, and that they are directly used for your business purposes, and keep the documentation and make sure that the amount is a reasonable amount, okay? And then you should be all good to go. So if you need any support in trying to figure out, your tax deductions, if you need any support when it comes to your business bookkeeping, tax preparation, please reach out to us. Get on my calendar. We can definitely talk about it. All right. So in the meantime, cheers to your success, and I'll talk to you soon. Bye-bye.